Your market news now. The dollar held near a 7-week high against the euro after Federal Reserve Chair Jerome Powell pushed back on the idea of a U.S. interest rate cut as soon as March. Meanwhile, French entertainment giant Canal Plus wants to take control of MultiChoice, making an offer to buy all remaining shares it does not own of the DStv owner. In a letter to the MultiChoice board, Canal Plus confirmed it would offer shareholders a cash payment of R105 per MultiChoice ordinary share. That is a premium of 40% to the JSE-listed company's closing share price of R75 as of yesterday. To give us perspective on the markets, we are joined by Chantal Marks, who is from F&B Wealth and Investments. Chantal, thank you so much for your time. I suppose before we get into the actual company-specific news, let's get that market reaction following Fed Chair Jerome Powell's press conference with the journalists.
What I found quite surprising about the market reaction, and it was quite negative, particularly when you looked at the tech sector, is that the Fed didn't change anything from what it said in December. So in December, it was indicated that there will probably be rate cuts this year, but that they will only be around about 3, and they'll probably happen towards the second half of the year. Now, what Chairman Powell said is it's just not going to happen in March. And I think the market kind of ran ahead of itself with expectations of cuts starting sooner. And that's outside of what the Fed had said in December.
What scenario would require the Fed to cut sooner?
I think you would have to see a massive slowdown in growth or a very sharp decline in inflation. The last bit of inflation or of changing the inflation rate or bringing down the inflation rate from about 3% to around about 2%, which is the Fed's target, usually takes some time. It's not something that happens very quickly unless there is some kind of a shock. But I think that it is very, very unlikely that that is going to be the cause of a Fed cut in March. The more likely scenario, but also low probability scenario, is a big growth shock. So something catastrophic happening and resulting in a severe weakness in the US economy.
In my intro, I mentioned that Canal Plus offering a non-binding offer to buy MultiChoice. The share price at some point this morning was up 27%. It's come down slightly to about just over 23%. What did you make of that?
Yes, so quite an interesting development because from a regulatory perspective, international companies or individuals can't own more than a certain amount of media companies in South Africa. So this total takeout of MultiChoice will have to require special approval. And my thinking is that there's already been some sort of regulatory engagement for them to even begin making this offer to the board of MultiChoice. I also think that they're being quite opportunistic because MultiChoice's share price has been under severe pressure over the last year or so. As they're in the process of kind of upping their investment cycle, they're building a whole new platform for Showmax with Peacock. So cash flow has been under pressure and profitability has been under pressure. So the share is trading at very depressed levels. And even with this 40% higher offer that they've made, it doesn't, I think, adequately compensate investors for losing potentially out on the long-term growth of MultiChoice.
Another company that made news was Ellie's, and most of our viewers would be familiar with it. It was a company that was quite famous for putting up your DStv dish or whatever the case may be. That one fell 60%, traded at 2 cents at some point. What do you make of this company that at some point had joined the big leagues and listed in 2007? Can it actually be saved?
So I think this is a kind of an opportunity to learn because they had one big revenue stream. They had other different smaller businesses within the Ellie's group, but the one big revenue stream was putting up satellite dishes. Now, when Microsoft launched DStv, the initial growth rate was exceptionally strong and demand for satellite dishes were very high. And that was kind of sustained until the broadband boom that saw even subscribers in DStv shifting over to kind of rather streaming via the internet as opposed to having satellite dishes on their roofs. And so you continue to see the revenue line come under pressure and by extension profitability. And what happened with Ellie's now is that they were trying to reposition themselves as a renewable energy and renewable energy components business. They were in the process of making a pretty sizable acquisition in that space to bulk up and get scale. But their funders, unfortunately, decided not to support them in their endeavor. And now they're in trouble. So filing for business rescue. It's unfortunate. They probably should have acted a little bit sooner in terms of shifting the main revenue stream of that business. But yeah, a cautionary tale, I guess.
As we wrap up, is there an area of the market that investors are gravitating to?
Oh, investors are gravitating towards AI, Nastasia. I think the last few days has been we've seen less of that because we have had a bit of a downturn in sentiment related to yesterday the Fed and the day before some slight misses from Microsoft and Alphabet. But I think the next year is going to continue to see a lot of development in that space and a lot of excitement in that space. So my thinking is that that's still going to be where a lot of money is going to go to.
All right, Chantal, thank you so much for your time. That is Chantal Marks, who's from FNB Wealth and Investment. And just to add to the story that we're talking about regarding Ellie's, looking at cash on hand as of April last year, they're sitting with around 3.6 million rand versus interest-bearing debt, including overdrafts of 169 million rand. And the question is, can business rescue actually save Ellie's? However, we're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.